We've got a lot to cover today, but we want to start the show a little bit differently. We want to tell you guys a little bit about what we did since we spoke to you last Wednesday on this podcast personally. You know, when you have this type of movement in the markets, it creates a lot of opportunities, and we had a lot of fun this week. Tori has a great example of this. I believe, Tori, you were setting up a new precious metals portfolio for a client of yours. And why don't you just give us a little snippet of some of the things you were able to take advantage of as the prices moved?
Yeah, I mean, volatility is sort of an understatement. That doesn't mean you jump in and follow the herd all the time. With this particular portfolio and other portfolios, a cost average approach is really a good way to go about things. And when the gold price was really running, that doesn't mean that, hey, we better grab it now or we're going to miss out on something. If you look at the technical analysis that we provide every week, we know that as we've separated away from the moving average, for example, which we'll get into, it doesn't mean that we want to necessarily be grabbing the gold, but the silver and the platinum remained at extremely good values. In fact, the ratio had gone even higher to 92.5 to 1, that gold-silver ratio. So we positioned in waves in the white metals, and we left the gold position alone. And then on the correction in the gold price, and more to come, then we can round out that gold position.
You know, Tori, this is the fun part about working at a place like McIlvaney's office is that we do get to approach the markets and approach our clients with a more advisory role. We get to have a mutual education between us and our clients. What are we trying to accomplish? Where are we trying to get? How do we see the markets playing out? Not just in terms of, do we pick up gold, put it in our basement, and let it collect dust? Or is there actually an active strategy where we're not just looking at the dollar price in gold, but looking at the ratios and ways to increase the size of that pile in the basement over time?
That's a great point, Miles, and let's get to what actually did take place this week. I know you're excited to see some new channels on your charts. You've been stuck in the same charts for quite some time, so why don't you take us into what you saw technically this week?
Well, up until the day after we recorded, which is always unfortunate. It doesn't happen often, but when you record on a Wednesday and the show goes live on a Thursday, we're well aware last week's show didn't have a $40, $50 move shown on it, but that doesn't happen all that too often. So after about 5 years of being stuck in the same range and looking at that same trading back and forth, obviously, as we're all aware, we did finally have that breakout up above the 1350 mark, and boy, it sure ran on us for a few days. So with that breakout, to me, it made perfect sense. We got up into the 1430s, 1440s here over the last week. You know, if you look at the high point, low point of the long term, this past 7 years after gold had peaked out at 1900, put in a right shoulder back in about 2012, 2013, and came down. We actually have retraced 50% of that move since we hit bottom in 2015. We're halfway back up on this previous bear market down. Not all the way to the top, but back up to the start of the bear market in the end of 2012. Here in the 1400s, we've got some important numbers. We just hit one of them, the 50% line. I would argue the top of that 2013 high is probably our high for this year. Whether we get to it on this move and then have a big correction down, or whether we see a correction here over the next few weeks and then take another stair step up. So from my impression, if you picture yourself walking up a flight of stairs, it's not where your foot is hovering in the air, it's where you put your foot down on the next step. So the two numbers I'm looking at this year are 1345 and 1485. And I think we're going to see both of those between here and December. The question is which comes first, but I think we see both of them. So for you like me, who see this as a breakout and are looking for that next opportunity to step into the market, over the last couple weeks, obviously we've had this big jump up. We had some massive RSI divergence on the 15-minute chart, 3 drives pattern up. Not surprising to see a pullback here. We're back to the short-term 382 fib. If it continued up from here, that's a really shallow correction at that point, and 1485 is a knock on the door. If we do push back down a little bit below, there's some stair steps down to 1345, but I want to see that old ceiling turn into the new floor. I want to know we've taken that next step up. I love screaming breakout. I'm not screaming bull market till that happens.
Do you care when that close is? Are you looking at the end of a day, end of a week, end of a month? Like what's gonna be your true test? We're not talking like intraday here necessarily, are we?
No, I mean markets come into levels, and usually you'll have a bull bear fight there for a few minutes, more likely a few hours, days, or weeks. I mean, we're talking about a 6-7 year channel, multi-year channel. So I'd expect the fist fight there to be a long one, a few weeks, a few months, something like that.
All right. Well, it was nice to see a 6-year high, obviously, in gold, and hopefully you didn't buy right at the top. Let that be a lesson to you if you did. Again, not chastising you, but just make sure that you're listening, that you're watching, that you're looking at the technical analysis, and don't join the herd, right? Be patient on these things. And we talked last week, too, about whether silver was going to confirm.
So a couple weeks ago, we talked about that 1510 mark we've been playing around. I mean, that's a multi-decade price line that we see multiple points at. But zooming in the chart a little bit, because as we're looking at prices starting to step up, we should look at just the last couple years until we get out of the last couple years pricing. And then we can, like we've done with gold, start stretching the chart out and looking at some previous prices from 6, 7, 8 years ago. Silver came into the short term 382 fib, which has been a short-term line in the sand at 1626. We've got high points, low points. It's been a floor. It's been a ceiling. It's been an important number. And lo and behold, we hit it and we drop back down. What we didn't do is we didn't put in a new low. And now we're on the way back up, back above 1510. So in order for silver to confirm, and these are just my numbers, but in order for silver to confirm, I need to see another $2. You know, I'd like to see 17 and change. I like to see us really start pushing to get above a lot of the noise we had in 2017, 2018, and to get back up to the 618 fib and above it. Building on what we talked about a second ago with gold, if we see the price continue to move up, I think silver does follow. I think in this case, eventually the hare wakes up and outruns the tortoise. I think the hare wins.
Well, I think, Miles, also one of the reasons that you didn't see silver react the way that gold did is it's not the global safe haven that gold is.
No.
Yeah, right. It's not the true monetary metal. It's not that it isn't one, but Eric, you're touching on the point that I think is in the minds of every listener, and that is, why did gold just do what it did? And this kind of transitions, Miles, to what you were just talking about a second ago. Why do we see metals move at different paces in different markets? And gold is the safe haven, Eric, and it's also the one barometer with monetary policy, right? Fiscal policy, geopolitical tensions. And we talk about the fundamentals on this show. Gold was responding to that, responding to central bank policy. So you can't always expect your platinum, palladium, silver to be doing exactly what the gold is doing. It just sort of stands alone, and it does better in times of deflation than people give it credit for. So before we jump into platinum and palladium too, I want to say something that's not necessarily technical from a scientific standpoint, but going back and looking at this chart, if we can insert the 50-day and the 200-day moving averages, I think it's important to see that when something overshoots those moving averages that aggressively, that quickly, right, and that far, well, you should expect there to be a pullback. These are healthy pullbacks. Miles, you are not saying the party's over. Even if we come back down to that 1365, very bullish activity regardless. We need the pullbacks, but don't get discouraged. When you're looking at a separation from the moving average that high, I would exercise caution.
So platinum should be pretty quick because it looks almost identical to silver. However, platinum did one thing silver didn't. You know, platinum came up into that 382, which has also been a floor, also been a ceiling for the last couple of years. You can see on the chart here. But what platinum did is platinum actually exceeded that floor for a brief period of time earlier this year. Now, it has come back to its increasing support line and is sitting just above that. But the next move up in platinum should push us up to, I would argue, the mid to high 900s, 975, and that's going to be the same argument on the gold side. And now you've got this stepping up both higher highs and higher lows, and that starts arguing breakout at that point as well.
And moving into palladium, Miles, you said a few weeks ago that, you know, palladium had some big resistance up at 1548. We saw it hit that number, right at that number, and then bounce back down. As of this morning, we're at about 1527. What made it bounce off of that 1548 number?
Sure. Well, it's that right shoulder. Going back to the old high, it's the right shoulder from March. So it wasn't surprising to see some resistance there. That doesn't mean that's a top. As we've talked about multiple times over the last couple of weeks, just because we think platinum beats palladium percentage-wise, that doesn't mean palladium's coming down. That just means platinum, once it starts moving, exceeds on a percentage basis the speed at which some of the other platinum group metals are moving. So the dollar's been stuck in this rising trend line since about April of last year. Now, we've been watching this bounce back and forth, but for the first time now in quite a while, following on the heels of the Fed announcement last week, we have broken below. So I would argue we're probably on our way down to at least the 94.9 level. Probably a bounce back up here. Again, ceilings turn into floors, floors turn into ceilings, support and resistance switch sides. So if we see the old support turn into resistance and we continue down on this Fed announcement of the possibility of additional financial easing, monetary easing, and lower interest rates, I'm arguing we could see the dollar targeting all the way down to about 93.8, and that would bring us down to the September-October lows of 2018.
We've got multiple things building fundamentally this week between this battle between the Fed and President Trump, which just keeps getting more entertaining. Trump actually came out earlier in an interview and said that the U.S. should actually have the ECB's Draghi instead of Jerome Powell. They've been going back and forth on what to do with interest rates. So between those two battling, you've also got President Trump and President Xi meeting in Japan on Saturday for the G20 meeting. So with all these fundamentals, Miles, we could see, these things help gold either get to your 1485 level or to back down to your 1350 level.
Yeah, I think this 10% climb in gold was really a reaction to central bank policy.
And let's not forget Iran, too, the Iran issue.
No, totally. I mean, it's not, geopolitical. That's probably half the fundamentals is what you're talking about. But in terms of our central bank, right, they don't want to see gold going up 10%. They're going to knock it down. How do they knock it down? They don't have to dump a bunch of futures contracts. They can come out and have like St. Louis Fed President James Bullard say 25 basis points on a cut would be adequate, that 50 would be overdoing it. So that tempers the market reaction, right? And then right after that, Powell said that even 25 may not be necessary. So in a matter of a week, how much in the economy can actually change where they completely change their tune? And don't tell me that that isn't political pressure. So we may say, yeah, there's a battle going on here, but he's succumbing to it a little bit. Powell is knowing now, too, that because gold did what it did, he better start listening to what it's saying.
Well, and Tori, the verbal intervention is just, it seems to be at a peak right now. You have Mnuchin this morning verbally intervening, saying that the China trade deal is 90% done. I don't know where that came from. That's not the news that we've been receiving lately, but on that news, the stocks kind of jumped this morning. And then later this afternoon, Trump came out and said he's happy with the things are now, and he's ready to slap tariffs on the remaining $350 billion of Chinese goods. He did say he'd knock the percentage down to 10 from 25, but with that news, the stocks kind of finished the day, I'd say unchanged, I think a little bit down, but the verbal intervention is very real and it's very relevant in today's market.
Well, and gold's not the only barometer, right? Oil has always been a barometer, and look what it's done. It's up over 15% from low to high here just in 2 weeks. It's up 2.5% today, and we've topped out at a little over $59 a barrel, and that is a huge indicator, too, that there are tensions going on there, right? And Miles, you already brought up Iran. That's a huge oil mover, right? Is anything to do with Mideast tensions is going to change the oil price. So gold and oil are telling you that something is looming on the horizon, okay? And they will start to do things to try to rein it in. But, with the Iranian tensions, Trump came out and said, look, there's no more John Kerry and Obama. We're talking about President Trump, and he said anything to do with American interests will be met with great and overwhelming force on the part of Iran. That's all we need to know about geopolitical tensions, is if there's an active war on either side, watch what gold does, watch what oil does.
So that's going to do it for Golden Rule Radio this week. We thank you for stopping by. If you like what you heard, click the subscribe button, ring the bell, head on over to our website, McIlvaney.com, Twitter @ICAGold, Facebook, McIlvaney Financial, or if you have any questions or want to discuss your personal portfolio with one of the advisors of McIlvaney's ICA, you can give us a call at 1-800-525-9556.
Have a great week.
Have a great week.